A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a bold move, U.S. President Donald Trump's trade advisor, Peter Navarro, has publicly urged India to cease its purchases of Russian crude oil, claiming that such actions are undermining global efforts to isolate Vladimir Putin's war economy. Navarro's statements, published in an op-ed in the Financial Times, have sparked significant debate regarding the geopolitical implications of India's oil trade with Russia. He characterized India's reliance on Russian oil as opportunistic and stated that if India aspires to be recognized as a strategic partner of the United States, it must start aligning its actions accordingly. Navarro's op-ed comes on the heels of canceled trade negotiations between the U.S. and India that were set to take place later this month in New Delhi. The abrupt cancellation has raised eyebrows, especially considering the ongoing tensions surrounding India's continued oil imports from Russia since the onset of the Ukraine conflict in early 2022. In his remarks, Navarro emphasized that India has effectively become a global clearinghouse for Russian oil, converting embargoed crude into high-value exports while simultaneously providing Moscow with the financial resources it desperately needs. This perspective has drawn criticism from Indian officials, who argue that India is being unfairly targeted for its oil purchases while other nations, including the U.S. and European Union, continue to engage in trade with Russia. Earlier this month, the Trump administration announced an additional 25% tariff on Indian goods, citing New Delhi's ongoing Russian oil imports. This move escalates the total tariffs imposed on India to an unprecedented 50%, marking one of the highest cumulative rates on any trade partner of the U.S. In response, India's Ministry of Commerce and Industry labeled the tariffs as extremely unfortunate, asserting that they were unfair, unjustified, and unreasonable. The White House has indicated that further secondary levies on India could be on the horizon, contingent on the outcomes of ongoing peace talks between Trump and Putin. This situation has placed India in a precarious position as it navigates its energy needs while facing mounting pressure from the U.S. to distance itself from Russia. India's Ministry of External Affairs has defended its actions, stating that the country's imports of Russian oil are a necessity driven by the current global market situation. They argue that the shift in sourcing was primarily due to traditional supplies being diverted from Europe in the wake of the conflict. The ministry asserted that India's imports aim to ensure predictable and affordable energy for its consumers. Navarro's comments mark a notable shift from the approach taken by the Biden administration, which, alongside G7 nations, Australia, and the EU, established a price cap of $60 per barrel on Russian oil in late 2022. This initiative aimed to limit Russia's revenue from oil sales while maintaining some stability in global energy markets. There have been indications that the EU is considering lowering this price threshold further. Despite the external pressures, analysts suggest that India may not be inclined to abandon its Russian oil imports entirely. Shirlan Shah, a deputy chief emerging markets economist at Capital Economics, noted that while India could theoretically find alternative suppliers with minimal economic impact, it is unlikely to make a significant effort to sever ties with Russia. He highlighted that Indian policymakers would be reluctant to compromise their long-standing and generally cordial relationship with Moscow, particularly in light of the geopolitical landscape. Navarro's criticism also raises concerns regarding the transfer of advanced U.S. military capabilities to India, as he expressed apprehension about India's growing ties with both Russia and China. This sentiment reflects a broader concern within the U.S. about India's strategic alignment in a rapidly shifting global order. In a related development, Indian Oil Corporation, the country's largest refiner, has stated that it will continue to purchase Russian oil based on economic considerations. The company's head of finance, Anuj Jain, noted that the processing of Russian oil in the June quarter was approximately 24%, slightly above the average of 22% for the fiscal year. He confirmed that purchases for the upcoming September quarter are ongoing, with discounts on Russian oil remaining competitive. As the geopolitical landscape evolves, the relationship between India and the U.S. will be closely scrutinized, especially as Indian Prime Minister Narendra Modi prepares to meet with Chinese President Xi Jinping later this month. The planned visit by U.S. trade negotiators to New Delhi, originally scheduled for August 25th to 29th, has been postponed, further complicating the discourse surrounding trade agreements and tariffs. The outcome of these developments will undoubtedly shape the future of U.S.-India relations in the context of global energy dynamics and geopolitical alliances. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.